I'll be moving to one of the most important area. It will need me 20 minutes of explanation and 10 marks for you in exam. 100% questions are coming for every student in that, which is on predicting and preventing corporate failure. Predicting and preventing corporate failure. This, some students have got 2 questions in exam, some have got 1 question. Let's first understand what is corporate failure. A corporate failure is nothing but, to put it simple, insolvency. To put it simple, it is insolvency. Many companies have reached the insolvency stage or have got revived in between also, revived in between, but they are failure. They are failure. The failure can occur because of multiple reasons. The failure can occur because of multiple reasons. It can occur because of technology. It can occur because of poor execution, poor decision making, mistakes, or too much of borrowing, too much of expansion. So lot of reasons can be there for a corporate failure. Voice is breaking. Others, can you confirm? Okay, so why do companies fail? Lack of innovation. Nokia, BPL. Hostile business environment. Hostile business environment. There is a study which says candy market. The candy market. So whenever you buy, you go to a shop, you need a change. Sometimes they'll give you a chocolate and say the change is not available. UPI market has kind of killed, not killed, but it has led to a decrease in demand on the candy. It has led to a decrease in demand on the candy market, because many a times the change I have to give, I was giving it as a chocolate to many people. That was also one market. It was one part of the demand. Hostile, frequent changes, financial misappropriation. If I'm not sure how many of you will know, but there was a Satyam scam which happened. That is a financial misappropriation. Internal conflict, strategic failure. What is strategic failure? You expanded in Chennai, whereas you should not have put a plant in Chennai. You should not. You went and acquired a company in Sri Lanka. You should not have acquired that company. So all this lead to what? Companies failure. Failure again does not fully go to insolvency. Sometimes you may revive back. Nokia is trying to revive back. BPL is trying to revive back. Why are we needing to know what is? So it is very critical that I need to predict corporate failure. I need to predict corporate failure. Why? Only simple thing. If you can predict it, you can take corrective action. If you know that you are going to fail, you'll obviously try to take corrective action. There are certain models which will help you in predicting a failure. Today, looking at data, somebody may say Byju's can fail today. Byju's can fail today because Byju's is under a lot of trouble. But if you can look at certain models, they would have predicted Byju's to fail 3-4 years earlier itself. That is what you're going to see now. What you're going to see is, can I predict a failure is going to happen or not before it is happening? 2-3 companies which have failed in India. Bhushan Steel. There's a model called Altman Z-Score. That Altman model, if you had applied 4 years before that itself, you would have predicted that Bhushan is under failure possibility. Bhushan is under. The only thing is, these models can also give you 2 types of error. One is called type 1 error and type 2 error. What is type 1 error is, it gives you that it can fail, but it does not fail. It does not fail. Sorry, type 1 is, it says that it will not fail and it goes and ends up failing. And the other, it gives a false alarm. What is false alarm? It says it may fail, but it does not happen. So both can happen, but there are certain models which are there which are going to predict whether a failure is going to happen or not. So need for predicting corporate failure, survival is important. Survival is important. Predicting can help in corrective and preventive measures. There are 2 types of model. I have quantitative model which are going to use your financial ratio, and there is a qualitative model which are going to use non-financial data, maybe which comes in regulatory filing, director report, some other commentary, but will use non-financial data. Today, I invest in shares of so many company. I want to know whether TCS will fail or not, whether Tata Motors will fail or not. Most of these companies will not fail, is my sense. There are certain models to tell you that. There are certain models to tell you that. In that, the first model we are going to learn is called Altman Z-Score. Most important, only area from where questions are coming in exam is Altman Z-Score model. I've already written there. Most important, Many students have got questions in exams from this. Something which you have to 100% read it before exam. What it does, it predicts probability of bankruptcy. It predicts what? Probability of bankruptcy in the next 2 years. Yesterday only I was reading about it. Okay, let me show if I can. Altman study of Indian companies who had failure. Selected Indian companies. This was an Altman model. It predicted Bhushan Steel will fail. It predicted Bhushan Steel will fail by using a score x1, x2, x3, x4, x5. You'll understand calculating all this. It did that and it gave an overall score. It gave an overall score. Methodology we'll understand in some time. One example is Bhushan Steel. Kingfisher Airlines, something which you could be knowing about it. ABG Shipyard, Jyoti Structures, Lanco Infratech, JP Infratech, Geetanjali Gems. When they did this model, 6 out of 7 companies it predicted. One company it could not predict. One company it could not predict. So it had a 85% success rate. It has a 85%. This is one study done by it. Now what happens is this study, you cannot exactly tell what is going to happen. Now how did this Altman model came into picture? Let's understand that. What Altman did is he read about companies which are failing. He read about companies which are failing and developed a model. This is what any person will do. You will develop a model. Model will give you a score. If the score shows failure, you're happy. If the score does not show failure, that is the company is not going to become bankrupt. It is not showing that it is under problem. You change the formula. You change the formula till you achieve a formula which is working for those failures which have happened. So the formula says 1.2, 1.4, 3.3, 0.61. Now somebody say, what is the logic of this? Logic is nothing. You did continuously changing the formula till you finally achieved a formula which says failure is going to happen for all the 7 companies. All the 7 companies which is under study. Now, some students have told me in the exam, they are giving this formula itself. That is Z-score is equal to 1.2, 1.4, 3.3, 0.61. But being very important, please remember the formula. Being very important, please remember the formula. They are not giving formula for what is x1, x2, x3, x4, x5. But they are giving formula for what is Z-score. Few students have told me, okay. I cannot be 100% sure, but few students have told in the form itself, they are saying Z-score is equal to 1.2 x1, 1.4 x2, 3.3 x3, 0.6 x4, 1 x5. How the exam question will come? They'll give data about a company and then they'll say calculate Z-score. MCQ, how will it come? First MCQ, what is x1? Second MCQ, what is x2? Third MCQ, what is x3? Fourth MCQ, what is x4? Fifth MCQ, what is x5? Sixth MCQ, club it together. Seventh MCQ, how do you interpret the score? I'll discuss on all of that. So what model does? It focuses on liquidity. What is liquidity? Ability to take care of your short-term obligation. One way of measuring liquidity is working capital. Now, one good thing is every formula denominator is total asset, except for one formula which has total liability, So how you will remember the formula? Your denominator are total assets. First is what? Liquidity. Liquidity is measured through working capital. Second is profitability. Profitability is measured through EBIT. Profitability is measured through EBIT. Third is leverage. Leverage can be measured through your market value of equity or through your retained earnings also. Through your retained earnings. Solvency. Solvency is ability to repay my liability. Activity, my performance. Sales by total asset. X1, X2, X3, X4 is written below, X5 is written in the side. Okay, I could not write it together. X4 had a little lengthy formula. So be very clear. The formula is, you'll have to remember this. I don't have a choice here. You will have to remember this. Please do it before exam and go. At least questions are not very tricky. X1 is what? Working capital. How can I make it tricky if I want? I can give you a balance sheet. I can give you current assets data, current liability data. You know how to calculate working capital. I don't want to get into all that. Working capital is current assets minus current liability. Retained earnings is what? Reserves and surplus. EBIT is what? Go to your P&L and find what is the EBIT of the company. Sales, you very well know what is sales. Market value of equity, this is for publicly held. See the heading. Publicly held. Publicly held means it's a listed company. Publicly held is a listed company, which means market value of equity divided by total liability. I'll come to a problem solving in this in some time. Most important for me. This is the most important area for me. Have full clarity. This will take care of at least 8 out of 10 students should get a 10-mark question on Altman Z-Score. Two case scenario they're asking, not even one. They're asking two case scenario on Altman Z-Score. One practical example. Yesterday only I was doing this. Oh, I've not saved it. I did one calculation on Zomato. On Zomato, I did the score. The score was coming comfortable only. The score was coming comfortable, but I did it on Zomato. Let's now do a problem. I'll come to a problem on this. So this is the formula. After we calculate, this is what I was saying. These are predefined weights. It's not arbitrary. You have not done just randomly. You have not taken a formula. You did lot of empirical data, rigorous testing. And was this the first time formula? No, it kept on getting refined. It kept on getting refined. So it is not that I can just randomly tell a formula saying that 1.2 x1, 1.4 x2, 3.3, 0.61. Please remember these coefficients. Now, only challenges as I proceed, you'll understand. I just hope they ask this rather than the other Altman. There are multiple formula in Altman. I just hope they ask this or give you the formula. Give you the formula. Why? Because I have other Altman like. There's another formula which is for private company. 0.7171, 0.847, 3.107, 0.420. I don't remember it. Being very honest to you, I don't remember it. You may not have a choice. Only I hope they give the formula if they ask for a private company. If they ask for that was listed company. This is for private company. Then if you are in a non-manufacturing, then the formula is again different. So this is the only challenge I have. The only challenge I can have is remembering the formula. But few students have told me they are giving formula in exam. If they give formula in exam, I have no headache. They can do it like that, saying that the formula for manufacturing is this, private is this, non-manufacturing is this, non-manufacturing emerging market is this, and then you understand from the question which scenario it is. All that I'm happy if you tell me to apply my mind on that. But remembering formula can be a challenge. It will be a big challenge for any student to remember this formula. And at worst scenario, if you don't remember, only one MCQ will go wrong because Z-score can go wrong. X1, X2, X3, X4 will not go wrong. X1, X2, X3. Again, remembering is very difficult because these numbers, see, if I give you a logic, you will remember it. I also don't have a logic for these numbers. If I can tell a logic for why these 5 formula, I can give a logic of what is X1, what is X2, but how do I give a logic for the numbers? I cannot give a logic for the numbers. 2-3 things you'll have to still understand. After you calculate a score, if you get a score less than 1.81, if you get a score less than, it is less than 1.81, for example, JP Infratech, the score was 1.67. Score was 1.67. If score is less than 1.81, you are in zone of distress. You have to remember this, okay? This they will not ask you, they will not give you an exam. Less than 1.81, you are in what? Zone of distress. Between 1.81 to 2.99, you are on the wall. You may fall this side, you may fall the other side. You are on the wall. You may fall into a distress situation or a safety situation, which means I need some monitoring. And the third one is a safe zone. Third one is a safe zone, which is greater than 2.99. Zomato had a score of greater than 2.99. When I did the calculation yesterday, it had a score. If you are personally interested, take any company, do their score. Any company financial statement will give you all the data. Listed company you take. Then came the other models also. First let's close this and then I come to other model. Understand the score less than 1.81, 1.81 to 2.99, greater than 2.9. Higher the score, it is better. Higher the score, it is better. What are the 3 area? Zone of distress, gray zone, safe zone. What is zone of distress? Severe financial problems. What is gray zone? Close monitoring. What is safe zone? Strong financial health. Clear? Any doubts on this? Let's take this example. I don't remember the formula, so I will write the formula from the question. I don't remember the formula. Other things I'll explain. What is x1, what is x2, what is x3, what is x4, what is x5. All that I'll explain. Formula, I'm being honest to you, I don't remember it. At least I can remember the first formula. If I want, I can remember Altman score for non-manufacturing. Other formula and all is impossible because it has number like 0.717, 0.841. Very difficult. Go through first the question. Go through the example. Mandatory question, you can just note it. It's compulsory. They'll ask from this, is what I have been getting from students. Okay, let's start doing it now. I've read the question. It's in the business of molding cast and pig irons for more than a decade. It is listed on NSE. Market value of equity, listed company. It's a manufacturing company. It's a manufacturing company. The formula will change for a manufacturing company, non-manufacturing company, listed company, private company. Market value of equity is what? 7,000 crores. Total asset are worth, today I may take little bit of extra time, I may go on till 9:35 types. I just want to close this, I don't want to leave it in between this area. Total asset is 3,500 crores, which is my denominator in most of it. Okay, in fact total liability should also be 3,500, but they are giving total liability as what? 5,000. Let's follow whatever the question has given. Let's follow whatever the question has given, because one of the formula will use liability in the denominator. Total asset is worth 3,500 crore. Working capital is worth 4,200 crore. Let's write formula later. Let's write x1 is equal to x1 is equal to x1 is equal to, what is the formula for x1? Working capital divided by total assets. X1 is equal to working capital divided by total assets. Working capital by total assets. Be the working capital figure. Total asset. 4 decimal answer. 1.2. Clear? Very simple calculation. This is a measure of liquidity. This is a measure of liquidity. What is the X2 formula? Is it retained earnings by total assets? What's the retained earnings? Retained earnings by total asset. Retained earnings is how much? Total asset. 4 decimal answer. 0.24, 2286. X3. Good part is everything denominator is total assets. Everything denominator is total asset. What's the third part? EBIT by total assets. What is EBIT? 6,000. Very huge. Yeah. It can't have an EBIT of 6,500 because the retained earning, everything looks lesser. Your sales is, asset itself is 3,500. Sales is, I think, what's the sales figure given? At least sales is more. EBIT is 6,000. Whatever the data is given. Because this ratio has the maximum impact on Z score. This ratio has the maximum impact. What's the number? Not 1.6. Okay, 1 point. Then X4. It's technically using the same in the denominator. I should use the total asset only, which is total liability, but they have given differently. Market value, what's the formula? Market value of equity divided by total liability. Market value of equity divided by total liability. What is the market value of equity? Total liability 1.4. Questions will come on what is x1, what is x2, what is x3, what is x4. Then last X5, what's the formula for X5? Sales by, just give me a minute. X5 is equal to sales by total assets. Sales by total asset. What is the sales figure? 8,000. Total asset. What's the number you get? Any doubts on the four numbers? I don't have anything to explain here. It's a very simple concept tested in exam. If they give me the coefficients, makes it more simpler. I'll repeat x1, x2, x3, x4, x5 again. Everything denominator is total assets only. One is total liability, but it's technically total asset. But okay, we'll have to know the other formula. X1 focuses on liquidity, which is working capital by total assets. X2 focuses on what is the retained earnings of the company, technically the leverage part, retained earnings by total assets. X3 focuses on profitability, EBIT by total assets. X4 focuses on solvency, market value of equity divided by the total liability. X5 focuses on activity or turnover, which is sales divided by total asset. Can you please do multiplication? Close it. 1.2 into, I don't have the numbers with me. You do it and then close it. 1.2 into 1.20. I don't have the numbers with me as of now. 1.2 into 1.20, 1.4 into 0.2286, 3.3 into 1.8571, zero point 0.6 into 1.4, and 1 into 2.3714. According to me, most important area of the entire subject. $11.0999. More than 3, I am in the safe zone. More than 3 or greater than 3. 3 or greater than 3, I am in a safe zone. Ultimate objective, see what questions can come is, they may ask what is X1, they may ask what is X4, and what zone is the company in. What zone is the company in? There are three zones we learned. One is called as your distress zone, second is your gray zone, and third is your safe zone. Any doubts on this? I'll wait for you to get me the answer to this. Do x1, x2, x3, x4, x5 and do calculation. X1, x2, x3, x4 and x5, everything is there. Keep doing the calculation. ICA material had only one example. I added one more example from another book. This example was there in ICA material. Apply the formula. You keep doing it. I'll keep doing it in Excel. I don't want you to see what I'm doing. You keep doing at your end. You keep doing it. Please don't refer the Excel. I'll also parallelly solve. Extra 10 minutes I'll need today. Please do the calculations. Some of these numbers can be negative also. EBIT can be negative, which can impact. It can be a negative number also. Remember, the x1, x2, x3 will not be a very tough one. Coefficients can be a challenge. I don't know, however you remember it, please remember 12, 14, 33, 6 and 1. That's the coefficient. 12 is 1.2, 1.4, 3.3, 0.6 and 1. How you want to remember this, that's a call you take. Because my only concern is in case they miss out giving the formula. I've heard students saying that it is given in the question. In case they don't, at least this I can manage. Others and all, I don't know. Will be very difficult. But you know the concept, at least answer x1, x2, x3, whatever you can answer it. And Z-score, take a guess and then proceed. In case, it's only in a scenario where you forget the formula and formula is not given. One thing you can do is, anyway, they'll give you rough paper to write. Moment you enter the hall, write down the Z-score formula there itself, because you read it 5 minutes before, write down the formula there. In case question comes and the formula is not given, you can at least use the formula which is written in your paper, because that's the first thing you do. Write the formula in the page, the rough sheet which is given. 5 minutes before read, go there and write the formula. At least 5-10 minutes you will remember the formula. Clear? Understand whatever the zone of distress, everything is there, and in case the question comes, you'll be able to handle it. Clear? Can we proceed? Can we proceed here? Now, based upon the Z-score, the companies are classified into different zones. Which of this is not a zone of discrimination? I do not have warning. I call it as distress, gray, and safe. Gray is in fact like warning. But I do not call it as warning. I call it as distress, gray, and safe. I'll come to other models later. I just want to discuss the other Z model, the other Z-score model. I have a lot of other models. I don't want to spend time there because I'm anyway time constraint is that. I'll discuss that tomorrow. Private firms. Sometimes you'll have to do it for a private firm. Same formula in X4. What is the formula for X4? You do not have market value, so they say use book value. You do not have market value, use what? Book value of equity. Use book value of equity, because market value of equity is not there. Market value of equity is not there. That is the only change they are talking about here. Use what? Book value of equity and not market value of equity. 0.7171, 8472, 3.107, 420, 998 can be difficult for you to remember, but I won't want you to at least remember this. Less than 1.23, less than what? 1.23, greater than 2.99 remains same. The numbers here were less than 1.81. Here less than what? 1.23, 1.81, 1.23. Outer limit remains same. Outer limit remains same. This zone you will have to remember. Again, I'm repeating, questions will come on identifying what category it is. You will have to remember. I don't have a choice there. Non-manufacturing firm. Non-manufacturing, you could be in a developed market, you could be in emerging market. You could be in developed market and you could be in emerging market, where they are saying we will not use X5. We will not use X5. X5 is related to sales. They don't want to use sales in the formula, because non-manufacturing company may not have huge sales. They are a service oriented company. Service oriented company, the sale figure will not be very high, because their turnover ratios and all are different. Their turnover ratios are different. So a non-manufacturing firm, just give me a minute. A service company, normally the revenues will not be very high, but profits can still be high. So for a non-manufacturing company, we do not use, is the audio fine now, friends? Can you? Okay. For a non-manufacturing company, what we do is we do not use X5 in the formula. X5 is related to sales. They do not have major sales. Formula, remembering, it's your choice how you want to do it. But remember the zone. Zone is 1.1 and 2.6. 1.1 and 2.6. To cut it short, here it is 1.81 greater than 2.99, less than 1.81 greater than 2.99. What is here? Less than 1.23 greater than 2.99, less than 1.1, greater than 2.6, greater than 2.6. This is for classification. Only this much you need to know. Less than 1.1, greater than 2.6, less than 1.23, greater than 2.99, less than 1.81, greater than 2.99. I at least don't see a possibility of you remembering this very clearly. At least I don't see a possibility. In case you remember, great. But otherwise, answer x1, x2, x3, x4 and x5 and see it before the 5 minutes before your exam. If you can recollect, but at least remember the other one, the other Altman, which is your manufacturing model, be very clear, because these are very random numbers. If there's a logic to the numbers, I can explain you. These are very random kind of numbers. I also cannot explain. Nobody can explain. Even Altman cannot explain, because what he did a historical study. And kept on changing the formula. He just went ahead and changed the formula. Ultimately, he said, what is the right formula? Give me answer to this. Which category is this? Is it a manufacturing company? Is it a private company? It is a non-manufacturing. It's a manufacturing, listed manufacturing, private, non-manufacturing, emerging market, and we have the other market. The formula is different. The rules remain same. So if you are at 1.6, you are under companies needing further investigation. Why this is very critical? Because 1.6 here would have been a zone of distress. 1.6 here would have been a zone of distress. Manufacturing company, it is a zone of distress. Non-manufacturing company, it is what? Under the gray area. It's under the gray area. Clear? Any doubts on this? I think I'm kind of done. I just take an extra 3-4 minutes. I have other models. I'll discuss that tomorrow. But only thing I want you to do is take any listed company from market and try to apply Z-score formula. You go through the balance sheet. From the balance sheet, pull out the appropriate number and apply a Z-score model for your better understanding. Clear? Any doubts on this? With this, we are done with the major part. I may have another 30-40 minutes of discussion tomorrow, and then I move to the next chapter. I'll end with this then.